All right, all right. Good morning to everybody. Hope that you're doing well. Let's take a look here. We're going to be going over some patterns as well as how we start off with the, kind of understanding our environment. So there's a few things I'm going to do. I want to pull up. We're going to go through and figure out and find certain levels first and foremost. And we're going to do it with the trading partner, since the trading partner will be a tool that if you're a list holder, you'll be able to have access to. At work, so can't listen too loud. Is it too loud? Hold on a second. Okay. No, that's I don't know. Got her. Best of luck, brother. I hope that you figured out. Thanks for being here anyways. Appreciate it. I don't think I understood that comment there. But yeah, if the so can't listen. Oh. I'm sorry. You're saying you can't listen too loud because you're at work. That's my bad. That is my bad. Here we go. Trading partner. Let's get the trading partner up. What we want to do is we want to update some of the, so let's clear this out. Okay, perfect. Let's update some of the environment information. So let me pull this up and we'll do it together. Just a moment. Just getting all my charts in one place. Okay, now we should be able to share the screen. Have you shared the streaming on Twitter? I have not. Nope. The Twitter thing, I don't know. I'm wondering if we should just do something separate. So this is just YouTube. I haven't shared it on Twitter yet. All right, here we go. So window. Okay, you should be seeing my stuff here. Okay. Sorry, I've got some patterns I'm kind of mapping out, seeing if there's anything of interest. And there kind of is. Like, honestly, there was like this Gartley cipher, and it didn't look symmetrical to me. I didn't really like the layout of it. You'd have to start at some weird kind of points, but it actually played out pretty well. So let me just show you back on. So we're gonna be getting into cipher patterns and harmonics and stuff like that. This just doesn't look very clean to me. Maybe something like that. I mean, I don't know. Not so much. Like the time, it's just not symmetrical. But the thing is, and it would actually be as far as like our target down here, might be better a little higher. But there's these harmonic patterns, ciphers and things like that can give us some lower targets. And this target is actually pretty close. Like if we were to go from up here and take this measurement, like again, it just doesn't look right to me. I wouldn't, so that's why I wasn't putting a lot of like stake into this. But so like roughly 54, 55%, okay, if we measure from here. And then what it would mean is if this was true, like a true Gottlieb, which again, it's just not. Like you have to be much closer. I don't know. Let's see. Like if we were where this kind of looks a little bit better. Like 49%. But then when from this D wave, right, on the way down, whatever the distance is between X and A, that's your target for here. And you can tell it is actually pretty similar. So about 50%. And then this is roughly, 47%. And that's roughly 50%. So, like that was the target. So you would have hit that if you traded it. It just doesn't look very good to me. So I was questioning how much stake there was in this. Anyway, just a thought. because we have, so we'll go over that, but that's not really what I wanted to talk about today. I just was taking a look at that, and I wanted to revisit it because I had seen it before, and I was looking for Cypher patterns. Let me just see real quick. Because even here, like with the Gottlieb, I mean, I guess we got close, but you want to be at that like 0.886. You want the timelines to be symmetrical. So this would be like very like scrunched. So we would have been like here to here was like 37 days, but then here to here was like almost double, you know. So the symmetry just wasn't there. Anyway, a couple reasons why I didn't take that trade, but if you traded that Gottlieb, then you would have got that. Obviously, we had our level set anyways, so we were kind of buying in this area, so we didn't necessarily need the Gottlieb to happen. But it was, this is something that we're going to be going over on another time. But here's what I want to look at today. So you should be seeing the trade partner, and I think I want to zoom in here. All right, hopefully that's clear. Can't really check it, so let me know if that's clear for everyone. Let me zoom in maybe a little bit more. Okay, and is that gonna clear it? That's gonna log it in there. Okay, so what we want to do is we want to go through these levels and update them. So together, we're going to update these levels. Let me just clear it out. And okay, perfect. Here we go. This is really cool because when we always talk about how we start with the environmental or like environment like kind of evaluation, like where are we in the grand scheme of things? Are we in an uptrend? Do we have divergences? Like what are we really trading? What is the market doing? So let's start with this. Sorry, drinking my coffee. All right, so support. So we want Fibonacci. Okay, we want global and we want local. So support and resistance. So we're gonna go for first global support on the 618. So we come here to our chart, and what we're going to be doing is we're going to get our Fibonacci retracement up here. Okay, we're going to pin it to the low on the chart, and we're going to go all the way up to the high on the chart. Okay, we're then going to change these digits, and what we want to find is the 6118 specifically. Okay, that is 1915.45. So we come back in here, we go 1915.45. Okay, now we want to do resistance. So it's going to be the exact opposite. We grab our Fibonacci retracement, we go from the all-time high and to the current low. Okay, and now this is now we're finding resistance, right? So global resistance. So this would be if we came up here, this gold line should be resistance where we get rejected and we look for a short up there, right? So that's what we're mapping out here. What did I say it was? It's 30, sorry, it's like so 36.59.80. 36.59.80. Okay, now we want local. So let's do this. Let's get rid of this, and we'll get rid of that. And we're going to zoom in. Sorry, my allergies are terrible the last couple days. So as far as resistance, this is easy, right? We start from the high. So local just means kind of in the more immediate, in the like a smaller time frame. What would be a level you'd want to identify? So this right here would be the level I would want to identify. 28.60 and 20 cents. This is the 618 resistance on the local trend, right? So what did I say it was? 28.60 and 20 cents. 28.60 and 20 cents. Okay, local support. You know where we're at, there's not much. There's not much to talk about because this is the low, right? So this is where we would be measuring from, and if we were to go anywhere kind of backwards, right, we would be we would be I mean, you see what I'm saying? Like we're already under it, so it's not actually going to be offering us any support. So you know, normally if we were up here or something, or we were in a range and we weren't quite literally at the yearly low, we would have a support level for this. There's not anything I'm going to put down for right now, just because of where we're positioned. So we're going to skip local 618 support because we're quite, I mean, look, this is what we would have to do. We would have to go to, and this is just, it's just kind of, I guess it's not ridiculous. It's not ridiculous. We can put it in, but it's not, when you're looking at a 15-minute chart compared to a, you know, daily chart, the support levels are going to be very different. But let's put this on anyways, because this would be our most local support of the 618. So it would be 1866 even. Okay, so we went from the low to the high, and then 1866. So let's put that on here. 1866 even. Okay, perfect. And one other thing I just want to map out, since we're here, is potentially this Elliott wave again, right, on a smaller time frame. So we have a 1, or sorry, we have 0, 1, 2, 3, 4, and 5. Now we did go higher, so 5 is higher than 3, so we did take that high, but barely, right? And this is what we typically see before a reversal. And you know, so of course we don't have to be going down from here, but this isn't giving me a lot of confidence. We can check kind of volume and see how volume's looking. Volume is coming down, right? So there's not a lot of increase in volume. If you look from here, right, it's kind of this downward. Now it actually is picking up in this area. So there's definitely a lot of fighting going on, but we'll check exo charts and kind of see like how things are looking. See if we're getting a lot of longs opening, or if a lot of longs are closing. Because here's the thing, this is what exo charts shows you that the volume doesn't. Okay, longs. Okay, we have longs, we have volume, we have their buys, but what we don't know is how many buys are closing, how many shorts are closing, you know, what's being stopped out, because it's not market. So anyways, this is yeah, it'll give us a better understanding, but we are kind of on an uptrend, a slight uptrend. I mean, it's an uptrend, right? All the same, this was all kind of down. So matter of fact, if when we get to divergences, we might see a divergence. So we'll take a look once we get there. That's on our list. So let's go back. Here we go. So daily, open, weekly, and monthly. So we want all of the opens: daily, weekly, monthly. For this, we're going to go to exo charts. We're going to click over here. We're going to go to Bybit and Ethereum. And what we want to do is we want to put on our markers. Okay, so we'll hit our markers and marker settings. Okay, so we want, let's turn this off. Let's do, so we want the daily open, right? Yeah, so we want the daily open. All right, so daily open should be shown. And daily open, 1953. It's this yellow line right here, right? We've got this right here. Sorry, let me turn off a couple of the things. We'll just take it step by step for each little thing. Okay. So we opened today at 19.53 and 55 cents. So we're going to map that. So 19.53 and 53 and 55 cents. Okay, weekly. Come back here. We're going to mark. We're going to settings. We're going to go to developing day. Turn that off. Let's go to weekly. Okay, we'll turn that on. And what do we want? Not high or low. We want open. So up here, weekly open, 25.18. We're going to put it on our chart. 25.18 is where we open the week. Now monthly, same thing. Come here, let's do developing week. Let's go to developing month. We'll turn that on and we'll do monthly open. Okay, 27, 25, 35. 27, 25, 35. Okay, points of control. Points of control. Let's turn that off. All right. So same thing. Let's go to developing day and we'll do a point of control right here. Okay. Let's see, daily open. We'll turn off now. Point of control, 21.08.45 as of today, right? Well, I mean, as of right now, I mean, it's 21.08.45. Weekly, we're going to go here again. Developing week, turn that on. Weekly point of control, and that is here. It is 23.54.90. So 23.54.90. This is important just so we can kind of go through, but we'll get the points of controls. We'll do any naked points of controls, previous points of controls as far as yesterday's, last week, last month's, right? And then we'll do value area highs and horizontal supports, like big horizontal supports, divergences, ether, open interest, and market structure. And then this is going to give us a really good understanding of the trades that we should be looking at and maybe our bias, right? So it's just kind of like a clean slate, which I think we need after the market, really just kind of unexpectedly, at least for me, I was thinking that we would get some support along the way and just nothing, just a very rapid dump, which is, that's fine. It's a great opportunity. Okay. So what are we finding? We're doing the monthly point of control. All right, here we go. Developing month. Turn that on. Monthly point of control. And we got to find that. Okay. So M point of control. 28.34.75. 28.34.75. Done. Okay. Now we want to find a naked point of control. Naked point of control is just a point of control that hasn't been tested yet, right? Where is the nearest point of control that hasn't been tested? And we'll let this kind of fill in a little bit. Oops. And we know it's going to be, since this is the yearly low where we're at, right? All of these previous points of control have been tested, right? So the only other thing we could do is maybe go to like a weekly and see about points of control. So let's do a naked point of control. And it doesn't necessarily have to be down, it could be up as well, right? So we just want to find the nearest naked point of control. I kind of want to get some of these lower levels. So we hit that one. That was a big naked point of control at 2022. Didn't do much for us, did it? That was another reason why we bought in that level. Bottom of the range, naked point of control. It was the 618 kind of golden pocket. But look at these naked points of control. Way down here, 730 is the, as far as support for a naked point of control. That's not what we want going on here. hold on, do I have the, okay. Yeah, whoops, sorry about that. So I'm not going to mark this $730 because that's not likely to come into play. At least not very soon, right? So this technically would be the next point of control. This is for the week. I'm where are we looking at? 22. Let's go to daily and see how the daily is looking. So really we could go either here, which is 1890, or we could go 2353. Or sorry, 20, yeah, or 5250, something like that. So this one is the closest. So 1890. Yeah, let's put 1890 on there. 1890. And it's we got to keep in mind this is so I'm just going to put daily. Here, I'll put this D support. Okay. So yesterday's point of control, last week's and last month's, same thing. Let's go here. We're going to go we'll turn these off. Actually, I do want those, but yeah. Okay. So yesterday's, so previous day, we'll enable that, and the point of control. So 1859 and 95 cents. So 1859 and 95 cents. Okay. Previous weeks, let's turn that on. Previous week's point of control is 2834.90. 2834.90, which the monthly point of control 2834.75. So last week's and the current months are very, very close, within 20 cents of each other, 15 cents of each other. So probably not a coincidence there. Last month's. So let's do previous months. We'll turn that on. Points of control 30, 37, 75. So 30, 37, 75. Okay. So we've got this much filled out. Now the last thing. So previous day high, low, weekly, VWAP. We'll go there. All right. So here we go. So we'll go previous day. Turn that off. We'll do value high and value low. Okay. Sorry, it's following me around. All right. Jeez Louise. All right. So the value area high for yesterday is 1979.45. So 1979.45 cents, and then the low is 1803.75. So 1803.75. Okay. Horizontal supports. We're going to go to Trading View for this. Let's turn that off. By the way, let's just map this out since we're here. Did this. What would this mean? If we're not putting in an E or yeah, like an E wave, and it's like an ABC. So this would be like 0, I think. That's still bullish. So we would come with an A, come with a B, and come with a C, somewhere like that. So that's something that we could expect. And we did get that last time. We had our it worked out pretty well, and then it absolutely dumped. We had, let me put this on here. So it was 0, 1, 2, 3, 4, and 5. And then we mapped it out with a 0, A, B, and C. And then we moved back up, and then we dumped. So, it's it does help. We'll see if that, how well that plays out right here. So we'll kind of leave that on the screen. But let's back out. Let's go to Now, what this is asking for is support and resistance. Let's put on our levels. We've got support levels. So let's go to like our monthly level. All right, so that's up there. So nothing too crazy close. All right, we've got these levels here. What about daily? Yeah, a whole bunch of daily. So, and let me just hide these. So what would we be wanting to put up here? Obviously, the bigger levels, the better. This has got to be on here, right? Someone, yeah, all right. So we want to put this level on here. Let's get this level on here. Let's go right there with it. Okay, 17.15. So this is going to be our support. Okay, our next biggest support level, 17.15 and 65 cents. So 17.15 and 65 cents. And then resistance. Let's find our next biggest resistance level. Let's go monthly up there. It could be the monthly, pretty big level. So I'm going to put 22.74, this level right here. And remember, it's horizontal, so what once was support can turn to resistance, and what was resistance can turn into support, right? This has constantly been support for us so far, right? This has been resistance and support. So it was resistance over here. Well, it started out with support, became resistance, support, support, right? And now maybe this is going to be resistance again. Not sure, but 22.74 and 60 is what I'm going to put on here. So 22.74 and 60. All right, now let's hide this. Let's do divergence. I'm going to add this as a key level. So key level. And move this in to my key level. Come on now. There we go. Okay. So next thing, divergences. So let's look this up. Let's just find an indicator for this. Make life simple. So divergence. Divergence indicator. Okay, we're going to verify everything ourselves. Do we have this? That is a hidden bearish divergence right here, which is not surprising. So we don't want to put a ton of stock into this. Whenever you have a rapid movement, and this was pretty rapid. I mean, we dumped. Let's get some measurements on this. 35% in a course of 7 days. That's pretty rapid, right? You're going to see divergences when you have a lot of movement. But honestly, there's not, I mean, yeah, but it's so different. I am going to put this on here. So here's what we're looking at. Let's draw a trend line. So when we're looking for a bullish divergence, we look at the bottoms, okay, of the candles and the bottoms of this RSI measurement, okay? And when we're looking for a bearish divergence, we're looking at tops. And we just want to make sure that we have a general consistent flow on tops and bottoms, meaning, actually, that's not. So, fuck me. That's a massive bearish divergence. I mean, if we were looking at like a All right, so not necessarily monthly. Let's go to weekly. Here and here. So it doesn't show it on those levels. Everything checks out here. Actually, this doesn't. This is a massive hidden bullish divergence. Okay, so let's look at this. So these levels are lower than these, right? So these candles are lower than these ones, obvious. But up here, right, they're much higher than this, right? So because we're looking at the bottoms, this would be a bullish divergence. Now, typically what we would see for like a standard bullish divergence would be what you have is, let's say these are the candles. So you have a candle that comes up, right? And then the price goes below, like the previous low, right? And then we start to come back up. And so you would see, all right, there's like a downward trend here. And then, oops, let's get that red. And then on the like RSI, you would have something like this, where it would come lower, kind of come up, and then doesn't go lower, right? And so we're looking for a divergence, meaning that these two charts have diverged from each other. Okay, so this is a standard bullish divergence where the candles show lower price action, but the RSI is showing higher value or like a higher or increased momentum. So this would be a standard bullish divergence. What we're seeing here is a hidden divergence where you have lower price to a higher price, right? So you have higher pricing, and then you have, right, lower. So this is a, so price is holding even though momentum has waned, right? And so this is a hidden bullish divergence. Because we're looking at bottoms, it's bullish. If this was happening on the top, you know, it'd be a different story. So and we did get good price action. So I'm not saying that this is like this is relevant to where we are currently. But if you are seeing this around here, you might say, okay, like we've got some upwards potential. And matter of fact, this did play a little bit into me thinking, especially in that ascending parallel channel that we were in for a while, right, that we were going to move up, but we did. We got a 66% move from there. So anyway, this is the difference. So this is a hidden, let me just kind of put this up here. So bullish, right? And then you have standard. Okay. So if that that should be clear in the differences. Okay, let's erase this here. Oops, I don't want to lock that up. Okay, except I still want that indicator. Divergence indicator. All right, now with bears, it's kind of a different scenario, right? We have here higher price action, but we can see in this one they drew it because it's standard, right? They'll draw the standards. The line's coming down. So decreased momentum, higher price action. This is a bearish standard divergence. It would be, in order to have something different, right? It would be price comes up, comes back down, we come up, and then we're here, right? And so let's get this here. Okay. And so then the trend line, of course, would be down. But what we would see on the RSI would be something opposite, right? So it comes up, comes down, comes up higher, and then comes back down, right? Wait, and we would see, oops, that looked pretty bad. We would see this. So this would be a hidden bearish divergence, right? So we would expect price action. If it's a bearish divergence, we would expect price action to go down. Bullish divergence, we would expect it to go up, right? So clearly we got the bullish divergence, price went down. We got the bearish divergence, price went up, at least temporarily. So that's kind of what we're talking about. So this is standard and this is hidden, right? But there are two for each. Bearish, we're always talking about the top, and bulls, we're always talking about the bottom. And this is the same thing for uptrends as well, if you recall. Like if obviously we want to see higher highs and higher lows when it is going on an uptrend, but what really defines an uptrend is the bottoms, right? That's what really defines the uptrend. Oops, sorry. Are the bottoms. Higher highs are great, but as long as we keep getting higher lows, then we say that we're still in an upward trend. And then same for bearish trends, right? We look at the tops. So this is just standard practice for how you look at things with bears and bulls. Okay, so let's get down to dailies and let's see, where are we with these divergences? So you don't typically cover massive gaps like this. Like it's usually one peak to the next. But this is, I mean, that's a pretty big difference as far as momentum and everything. But I'm not going to write that as a hidden bearish divergence. I guess let me just draw what I'm talking about. Like this line here, oops, versus this uptrend here, right? So that down line and this up line, let me make it so it's more stark, right? Clearly we're up here, but the difference is, here's the thing, you're not really supposed to jump over peaks like this. So it's hard, it really is hard to say. But I'm not going to count that necessarily. And you know what, if you did, hey, great, because look, you got a great down movement. So that's good for you. But this is clearly a hidden bullish, and also this would be the most relevant, right? So let's say that we were trading that hidden bearish divergence. Well, you got your down move, right? And your down move, the price went so low, and yet it doesn't match what we see on the RSI, which is that prices, or the momentum is increasing over here, right? So we see an increase in momentum and a decrease in price. Okay, this is a pretty good bullish divergence, hidden bullish divergence. Let's see. I want to look at one other thing here. Yeah. Is it? Sorry, I'm getting a little. Okay. Okay. Yeah. So it is. Sorry, I got confused for 2 seconds. So this is a hidden bullish divergence. I mean, it for sure is, right? So we have a divergence. I just got confused on if I was calling it a standard or a hidden. But either way, we have a divergence. It's very, very clear that this is going down lower and this is increasing. So that would be a sign. Let's put it on our thing. As far as divergence, it would actually be a hidden bull. Okay. ETH price, easy. We're sitting at 2170, or sorry, 2070. And open interest. Okay, so I actually have an app on my phone for this, open interest. I encourage you to get this app as well. And you can see this is something I've been working on. I'm trying to get some statistics on it. I don't have the numbers yet, but I'll tell you, there's like this whale watch where you can see people moving their money around, and it's pretty incredible how often, like, once big money is being moved around. I'm talking like $100 million sometimes, right? Like we're talking, someone's moving several thousand Bitcoin around. So it's amazing how often once big money's moving around that the market dumps or pumps, right? But anyways, so this app that I use, it's called Coin Glass. One word, has like this little kind of silhouette of like a demon pig or something. I don't even know what it is, but it's like this little demon, has like horns and a tail, kind of cartoonish. Anyways, that's what it is. But it's called Coin Glass. I would download that app, and one of the things that we look at is open interest. So we're just going to do open interest for Ethereum. Okay, and it literally is it just has it right here, but you can see liquidations, you can get alerts for big money movements, right? So let's go for Ethereum overall. Okay, the 24-hour change open interest, it is negative 2.62%. We haven't really got into open interest, so we will be doing that, but not right now. I just want to get that off the app. So open interest and market structure. So let's get rid of this. And by the way, just because we have that bullish divergence or bearish divergence or hidden or whatever, look, we're finding investors. We're building data. That's a data point. It's not on its on its own good enough to trade. Like, just because we have a bullish divergence doesn't mean that we're going to take a bullish position, right? This is especially near reversals. The divergences are okay. So if you have a massive uptrend, you're bound to get bearish divergences. Okay, but it's because of like the severity of how quickly things are moving, right? It's natural for the momentum to kind of wane, but that doesn't mean that there's not capitulation. And like when we saw, anyway, I'm talking mostly like this, okay? When a lot of people were kind of coming in to Ethereum, and Ethereum had really kind of moved, and it was moving and moving, and then by this point everyone was getting into Ethereum and stuff like that. Massive bullish massive bearish divergences, lots of run-ups and stuff, just because the market was so ferocious. Matter of fact, let's just see. Let's see if it has it. I'm sure it does. So yeah, this is exactly what I'm talking about. Okay. Look at this. So from here, bearish divergence, bear, bear. Okay. It's because the velocity was so intense and the price movement was so intense, right? But if you're taking a short here because, oh, it's peaked and it's such a big bearish divergence, right? It's so big. You're shorting Ethereum at 1300, right? And it ran all the way up, continued to run to 43. So this in itself is not an indicator to just trade because you have a bullish or bearish divergence. It's actually very flawed in the nature of how it maps out divergences, right? So yeah, you want to have it as a data point. But if you have a lot of price action, a lot of movement, a lot of volatility, the more volatility, the less reliable this is. It's actually pretty reliable when there's consolidation and you're ranging and you're doing stuff like that. That's pretty reliable, but not in big volatile moves up or down, right? So it's a data point, but that's all that it is. All right, let's move on. Market structure. Market structure. This was, yeah, this was good. It was pretty good, and we'd gone over market structure. But we are changing our tone on this, right? So let me take the magnet off. I'm just going to put this up here. So we're going to put an HHY, higher high, right? And then we put in a lower low, okay? Higher high, lower low. What's next? Now we put in a lower, lower high, right, relative to this high. So this is a lower high. And then again, we put in our lower low. So how many points do we need in order to have a defined market structure change? We need 3. So I like to write this up. 1, right, 2, and 3. So we have a defined market structure change on the bigger time frame, right? So it's yeah. So anyway, on a bigger time frame. Now, does that necessarily mean that we continue this trend all the way down? It doesn't mean that, right? But we're talking about definitions, right? So we're clearly in a bearish or bearish downtrend, or just in a downtrend, right? We're clearly in a downtrend. That doesn't mean that we don't find and capitulate and do kind of a bump and run and move up. It could. Doesn't mean that we don't just keep going on down, putting in another lower high and another lower low. Absolutely possible, right? Because that's currently the trend we're now in. So as far as our bias, the bias is we're currently in a downtrend. Now, we can look at a smaller time frame, because dailies, looking at months and months, it can be less helpful. But even still, right, we're in a downtrend. Clearly. I mean, there's no debate. We are currently in a downtrend. Now, if you want to go to a 15-minute chart, right? Do we have a change in market structure? Technically. But again, what are you going to be putting your bias on, right? The 15-minute chart that is showing higher high, higher low, higher high. Oh, we have a change in market structure. We have a change in market structure, yes, on the 15-minute candles, right? If we're looking at, say, the 4-hour chart, right? We have some significant highs that we have to take, right? This isn't a higher high. That's a lower high, right? We have to take out this. We have to take out this. And these and these. And most importantly, this one. So we have a lot of work to do before we can really define something as bullish from here on a market structure. So on a larger time frame, right? So yeah, we're clearly in a downtrend. So not that needed nearly that level of investigation, but you got it anyways. So market structure, downtrend. Okay, that's where we're at. So this is our environment evaluation. So when it comes to the trading partner, I want you to look at this. I want you to evaluate, but this isn't actually something that you have to update. So once this is rolled out and you have it and you're using it to map out the market, this section will be done for you, right? It'll just be updated every morning, and yeah, you won't have to worry about that. You'll be able to look and kind of find levels. You'll be able to come here, take this level and say, okay, so what do we have here, right? And it'll say, all right, global support 1915, right? You'll be able to go to 1915 and you'll be able to throw that on here and label it, and then you'll have your little folders and you can toggle things on and off, right? That's kind of the goal, right? As we understand how to use TradingView, how to find the environment, map it out. So you'll have these numbers updated every day. I mean, not all of these numbers are going to change every day, right? But some things will. Clearly, open interest, Ethereum price, possible supports and resistance and things like that. So anyway, that's where we're at on the environment evaluation. So we're in a downtrend. We're looking for some stuff. Now, we did that. That's great. I think that's fantastic. I want to look at a couple things real quick, which are not necessarily that though. Look at this. Did we not get some resistance up here? Certainly did. Certainly got some resistance up there. Doesn't mean that we can't break back in, but we definitely got some resistance. So parallel channel. Okay. So if you're looking at this on normal, like a normal scale, this is the channel, and you might want to adapt it a little bit. So you could like scoot this up, right? It doesn't do a whole lot. Like it actually looks pretty bleak, right? It looks like we could be going a lot lower. This channel that I drew was not necessarily for that purpose. It was to be on log. So we come down here, we hit the log button, and we get a channel that's actually filled, and we've now hit this, right? This is good for determining long-term moves and long-term uptrends or downtrends, right? We've talked about this, where you want to use log for kind of long-term. And in this case, yeah, this is providing pretty good support for now, right? But you want to, again, they're all data points. So when this is breaking out, you know, if this maybe we stay in this range for a little bit, right? We kind of come up. If we break up and out, right? This is sorry. I guess this would be a good sign that we have now changed the downtrend, and we're now entering into a bull trend, right? This would be a good sign of the end of a bear market, I guess is more or less what I'm saying. So yeah, let's get rid of that. Okay, so we have some support here. Let's look at a few other things. Let's get off log. Let's get off of this. Okay. Did I map out? I did map that out. Where could we be? I would like, well, actually, I don't think I need it. So let's do a 0, an A, a B, a C, right? Do we move up? We could. Do we maybe do 0, A, B, C, D, and an E all the way down? No, not all the way down there. Not all the way down there. That would be too much. That would be too much. Possible. Everything's possible. But maybe something like that, certainly. You know, I think I was mapping out some trend lines. So anyway, just an idea, again, kind of data points. We're looking at these, but let's get rid of that idea. So I still kind of like this. Oh, one other thing. Let's move to Bitstamp. And let's put this on log. So back out from the 4-hour, let's go to maybe daily, right? We have like a Fibonacci time zone that's coming up here, a big time zone in November and December. So maybe, I don't know, shit. Maybe we kind of mess around here, right? And maybe this is where we actually break this trend line completely, or maybe we move back up, right? But November, December it will certainly be an interesting time. Big time frames like this, they almost always produce. I'm telling you, like let's look at some. Let's see if we can find some here. Trend-based time, where is it? Why am I having a, oh, there it is. So So right here, down here, was a pretty good move. Oh, wait a second. Hold up. Yeah. So pretty decent catch there, especially with the retracement kind of moving up. But from there, it was down. Let's do another one because there was a pretty. I think we caught this one pretty good. I just can't remember where we measured it from. No. Oh, I think it was this. Like from here to here. No, but that actually did catch that perfect. Look at that for that downtrend. Can't remember where we got this, but I remember this was huge, and then it was this one to here. Caught this whole move up to the all-time high, right? So it caught this bottom. So 1700, which was the bottom, pretty sure, or at least within a few bucks, all the way to the all-time high. So that was a big move, obviously. What, 300%? Oh, I guess 200%, something like that. Anyway, pretty substantial. So typically we are able to catch some moves. I know I caught this one here. Where the hell was it? There's a couple different ways you can map things out, like 1, 2, 3. Oh, that wasn't it. Anyway, I've messed around with these before, and I caught some pretty interesting things. 1, 2, 3. So if you would have mapped that here, you would have caught this run up. It's interesting. Fibonacci time, something that we'll have to get into. Probably more on the course side of things rather than the YouTube, just because the YouTube's more like an introductory, where on the courses we're getting into kind of the nitty gritty, all the different variables and how to get into mapping things out. But anyway, so we've got, at least here, we've got maybe we're putting in a bottom. Sure hope so, because that would be great to move up from here. But let's go back. Take a look. We also have our Fibonacci time for this. Let's see. This high to this low. No, sorry. This low to this high. Right? Let's pull it up. It's got to be here somewhere. Where the heck is it? Oh yeah, I deleted it. I deleted it. I remember I was on like a spree and I deleted a whole bunch of shit. So, right there. Pretty incredible. I mean, look. Even if this ends up being the low and we don't catch another low in here, that's pretty incredible, right? If this ends up being the bottom. Like, we have to admit, why would this be producing, lows and highs and whatever? It's pretty incredible. All we did is we just took a measurement from here to here and look at this massive impulse down that we're potentially catching the bottom of. I mean, within a couple days. Pretty substantial, considering we're just measuring random space. A random 69-day spread gives us this time, and we're actually catching the bottom. So, Fibonacci time, for as weird as it is, it's one of the weirder things. Like, horizontal support and resistance, like that's pretty easy to understand, and there's just a lot of people looking at it. But the time thing always throws me through a loop. Like, it's just weird how well it holds up. And again, like I was telling you, let's measure this time too, because I think it gives us this exact one. Can't remember if it does or not. No, it did catch that bottom. Anyways, I don't know where we were, but we did catch that bottom. You remember that on the last chart that we looked at? Like, we caught this perfectly. And this low, so 17.15.75, and this was 16. Okay, so within 20 bucks would have caught the yearly low. Pretty fantastic. And then from that, moved to an all-time high. So yeah, I mean, pretty cool. Pretty cool. Let's just do a measurement. Let's go from here to here. Yeah, perfect. So from the all-time high to this low, you would have caught this big movement up, right? It wasn't an all-time low, but it was a parabolic move. I mean, not parabolic. I'm not gonna say parabolic, but it was a 30% move. It was pretty big. So that was pretty incredible to kind of catch that right before we took off. So anyway, we've looked at these before. I don't want to spend too much time. I've already spent too much time. But the market definitely could be putting in a bottom here. We've had a lot of key levels. We've had monthly and weekly levels. We've had this big level swing failure pattern. We've had the golden support like this here, right? Like, so this global support, we hit that level, and currently obviously we're above that level. So giving us a reaction very well could lead into, you know, higher levels. Now, something else we want to be maintaining an eye on is this trend, and we want, or this trend line, we're going to extend it to the right. Also, I want to change the thickness of this. How do I change that? Thought I could change it there. All right, I want to change this because we could be looking for, I mean, this trend line breaking could end up turning into support down the road, but it could be resistance as well, and obviously move from there. But this is where we find kind of bump and run patterns also. So yeah, we could be in the run. I'm hoping we're in the run stage of bump and run, and we'll talk about that. Maybe what is tomorrow? Saturday? So we'll maybe talk about that Monday. But basically, it would just be kind of boring consolidation. We might come up, we might hit some levels, we might not, just maybe more or less kind of boring consolidation, right? But then we break this, we get our bump, and we get our run, essentially, right? And so we might be entering, hopefully we're entering into the run stage of, or sorry, we're the, yeah, kind of the, like the run stage of the bump and run. I'm using these terms interchangeably. We'll talk about this. So I guess that's basically it. What did I say we were talking about today? I should probably know. We doing patterns? What did I say? Patterns. We've talked about a lot of patterns. Wasn't exactly what I was planning on. I got too deep with mapping out the environment. But some of the stuff I wanted to talk about with patterns are differences between like a flag and a wedge, right? There's some differences there. Also, we want to go over like head and shoulders and a reverse. Whoa, delete. A reverse head and shoulders. You know, kind of things like that. There's, you know, kind of like cup and handles that we see. A few other things that we really want to talk about. And I think that that'll be really interesting because there's some measurements with this. These are more basic. I mean, I would say that this is like kind of more like entry level. But it's good because entry level means a lot of people are looking at it, right? So that's the whole point, is we're trying to find in different groups of investors and people that we can buy and you know have success with in the market. So yeah, very kind of cool. Now I think I'm going to leave it there. Look, I'm optimistic. We're not looking for a short below 2000. Like, that's not happening. I'm not going to short Ethereum down to $200. I think that's a terrible idea, right? I think the likelihood of that is not very good. We're going to be getting into more shorts, right? We will be taking more shorts. There's not one here yet. I'm going to wait for a significant kind of level. So I guess this is my last point, and then we'll end this. So if we have this, right, this trend line, and then we say maybe we get this here, right? We have some other confluences, like maybe let's check like the fixed range for these. Okay, so that doesn't necessarily give it, but kind of like a high value, or like the value area high, some things like that. Like we're going to be now looking for more short opportunities. They're probably not going to be very big. Keep that in mind. Because we are so low that it could be like you don't necessarily want to be taking shorts around the yearly low, obviously, right? Shorts are more reserved for all-time highs, but that doesn't mean, because now we're really we are trending down, right? That if we come up here and if we were to hit that this wouldn't be a good opportunity for a short, right? So if we're given that opportunity, we're probably going to take that opportunity. And so we'll be looking at this trend line very, very closely. We'll also be looking at this parallel channel in log to see, if we have this, just imagine, right? We have this channel in log, comes up, hits with like the 618 and whatever. It would be a good level to take a short out. And so we're going to take a very conservative, very safe, obviously everything's going to be managed properly, but I might reduce my exposure by 0.5%. Why? Because I'm longing at the low. I guess 2,800 isn't that low, right? It's definitely not 1,700. But yeah, if we come up here 2,800, 3,000, it matches with the 618, it matches with this trend line. Like this would be a good opportunity to take out some shorts. Also, we are going to have bullish activity. You get bullish activity in a downtrend. Like let's just pull out real quick and look at longer time frame stuff. Let's get out of the logs. Let's kind of hide all this. I just want you to see, like, look at this. Like, okay, this was 2018. Big run up, right? I remember this. I remember the news, and I think Bitcoin was like 11,000, right? And then it was down and down. So we might be like, maybe we're here, relative to this other stuff. Like maybe we're here, or maybe actually we're like here. But there's good opportunities for shorts still to come, obviously, because we're identifying the downtrend. And for anyone that says it's too late, I guess I just want to like, look, we have high, low, lower high, right? So lower low, lower high, and then lower low. Okay. So you're like here, you're like, oh man, 500, like that's 75% down or whatever, 60% down from there. No, you still have opportunities, right? And there's going to be long opportunities. There's going to be short opportunities. Like we have so many opportunities all the time. It's just now we're just understanding, okay, I'm probably not looking for that higher high. I'm looking for that retracement to the 618. So let me just go over this real quick. I said I was going to end this, but I never do. Let's just map out a few things. Come on, give me the tool. Okay, so you come here, boom, right? This actually might be a Gottlieb cipher. I'm kind of looking at this, where you have like this and this and this and this and this. Let's just measure this out. Let's see how well that played out. So from here to here, about 45%. We'll measure this out from here to here. You know, a little bit more, 54%. Still, if you were going for 45, you would have hit it. This looks a little bit better. I mean, it actually looks really good. Looks really good. So that was like a nice little Cypher pattern. But let's draw a trend line. Let's see how well the trend line held up, right? Trend line held up pretty well, right? And so you come down, there was consistent, let me switch from this, go to my arrow. So touch, 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 right? And rejection, like we got a lot of good opportunities here, never came up, really never came up, right? Again, downtrends are defined by their tops. And so it's lower high, lower high, lower high, lower high, lower high, right? Then we enter into this run stage, and then we get the bump, and then we get the run, the trend upwards, right? We see this. But again, even still, this doesn't mean all-time high, right? What this means is we're looking at other opportunities for, say, that I'm sure that was a point of control. Let's actually turn on, let's see if this gives it to us. Oh, the points of control here. But look, value area high. Clearly value area high. I'd be interested to see where we are with this measurement here. So 618 didn't quite get to the 618. Where do we get to? Let's get to turning all these on. So we basically got rejected at the 382. So what does the 382 talk about? We discussed that the 382, let me clean some of this up. The 382 means that the trend that you're currently on is really powerful still to get support or rejection from that level. So even though we had kind of a bump and run and we moved up, we hit that 382, couldn't really hold it, and we lost it. So what can we deduct from this? That the downtrend is still severe. How did that play out? Well, I would say that it played out pretty well, considering that it was from here, if you shorted that down, about an 85% reduction from that point. So yeah, that's significant, right? We might have new trend lines. I'm sure we can look at. Does it help going through past stuff and seeing what we're really doing here, right? So we have this trend line. We tried to go above it, lost it, consolidate up, right? And this is really this is kind of cool, right? This is where we break, and yes, it's still down. It is still down from here, but you can see it starts to really flatten out, right? And then it does flatten out, and it's not good. I mean, it's like not fun to be here, you know. I mean, especially when you're at $1,400, and now you're at $114. That's a significant loss. Significant loss, right? But you eventually get this bump and run, you move up, market structure changes, right? We're not necessarily talking about taking out this high. We're looking at some of these other highs. We're coming up. Actually, this is still just consolidation. But we have this high, come up, lower high, or lower low. Is that actually a lower low? No, this is a lower or a higher low from here, right? We come up pretty significant, move up. See, so now we're trending again. Are we looking at tops? Not necessarily at this point. Now that we've broken out of this kind of sideways consolidation, right? And this range, we start looking at the bottoms. Obviously, the bottoms are dictating that we're in an uptrend. And you can see that we were able to maintain that uptrend, and obviously we just went absolutely parabolic and bonkers and did some very, very cool things, right? So yeah, Anyway, very interesting. And this line, I wouldn't be surprised if this line plays into the bump and run. If we were to, let's just map out a couple things. Let's just do it since we're here. So they intersect at like 1300. We might transition for a while. Like we might come over here, might get off of this one. What are we looking at? July? So yeah, it could be quite boring. I mean, realistically, if we're looking at the logarithmic, all right, sorry. Here's an idea. That shit gets really boring for a while. Like July 2023, we finally maybe pick up some support. And it's not necessarily low. I don't know, maybe it is lower, right? Maybe it's, maybe we get really, really comfortable with $1,300, $1,400, $1,500. Like maybe that's the case, right? But we get real comfortable in this area, but we start to transition off of this down line, this trend line, into this kind of uptrend line, right? We maintain that, and we have some time fibs for the July of 23, right? That's a long ways out, but we absolutely do on this fib channel. And I'll put on my fib thing right here. Sorry, I know I'm putting a lot of lines up here, but look at this. We've got this time zone. Oh wait, hold up. What the fuck was I looking at? Was it this one? That's July of now I'm getting confused. Because I swear we had this, unless it was November. Yeah, it is November. What was I looking at? That was 23. Hold up. Could have swore we measured something and it was 23, because I remember correcting myself being like, oh, I was thinking that was July of 22, and it ended up being July of 23. So I don't know. I must be up in the night. Nope. Who knows? Sorry about that. Anyway, discount that whole last little bit, because I mean this theory of July 23, because I was thinking that we were, I was thinking that we had something else. Sorry, look at all these lines. If I find that July of 23, I'll put that back on there, because I could have sworn that we were talking about that the other day. Let's see. Son of a bitch. All right. So let's just get this all cleared up, and we'll hide these zones again, hide that zone again. Okay, we'll get rid of this zone. So we're looking at November. That's actually our time zone, is November. So yeah, so then that wouldn't be too far off, because this is May. Fuck, we talking about it? October, November in here. No, I don't like this idea. I'm just gonna leave it. Like November, we do have a nice time zone like Fibonacci time between November and December. So maybe that's kind of when we get our bump and run. As far as like when that would be, yeah, in this area. So what would that potentially look like? Get rid of this here. We're mapping live, everybody, going through. So we kind of move, gets real boring. Somewhere in here, we maybe put in another low, maybe we take out that low, right? But we find support and we move up. Could be the case. Could be the case that we continue. Maybe we try to come up here again, right? We come back down, we're kind of ranging, right? We find support, move up. Anyway, I think we're transitioning into more or less a flat. I would hope we're transitioning more into a flat rather than, you know, continue this downward trend, which definitely is possible. I mean, you know, we've seen from the highs before Ethereum move, you know, down 80%, 90%, which could put us absolutely around and below, you know, 1,000. Let's just see. Where did that end up going? So yeah, it was 94%. From the high, Ethereum came down 94%. That's pretty shit. So, you know, but does that mean that all hope is lost? I mean, being down 94% from the high and then going and putting up, you know, 5,700% from that, that's a pretty good. I mean, that, you know, 57x, not too bad. So no, it definitely doesn't mean that Ethereum's done, but we'll want to watch and see. What would that mean if we put in another 94%, or we put 94% down? I'm just curious. I don't actually think we're going to do that, but we've done it before. That would be kind of that level of support right in there. Something like that. That would be absolutely crazy. Who wants to see a $366 Ethereum? Interesting. Anyway, look, the point is we had our immediate downtrend. We broke it. We kind of moved. We continued lower after that, right? So we had like even a longer downtrend. Yeah. Oh, one other thing. This is going to be important to check. Sorry, I keep saying this, but I don't want to forget this as well, because this is there's two things that we have. We have a pitchfork. We're just here. Let's just go through it. We're just here. Okay, we have our pitchfork. So this zero line is going to be could be pretty important. Didn't really get too much play off of that, but we might want to keep that here. Also, we've got our speed fan we want to take a look at. So we don't want to have like analysis paralysis where we have so much information that we don't know what the fuck we're looking at. I mean, that played out so well. That really played out so well. Right to the 7.5. Damn, and then we come back down, right? Doesn't necessarily mean we're going to the zero. I mean, obviously that wouldn't even be possible to get to the zero line, right? Just because we would go negative, right? We're not going negative. So that wouldn't necessarily be possible. But could we hit some of this other stuff? Could we get resistance? Could we get resistance? Absolutely. That's all absolutely plausible. Would we want to change that up a little bit? I don't think so. Would we want to take a different line? Would we want to go to this low? I don't know. I kind of like this. I mean, look how good that was. Look at how good that was. So yeah, we could be looking at some resistance the other way, right? Let's see if we can even flip this around, reverse. So that was the 2.5. Come back down, maybe 900. Shit. There's a lot to look at, and I'm just kind of messing around at this point. Basically, the main things I'm going to be concerned with are what people are looking at. We're going to be looking at the trend lines down. We're going to obviously going to look at our fibs, but market structure's down. We were able to identify here the global levels, opens, points of controls, things like that. So we're going to go through. Now that we have this, we're going to put all of this on our folders, so we'll be able to have our new levels. We'll look at our points of controls, our value areas, things like that. But the trend lines are going to be really important to watch. Let me just close that down. And I think we're probably going to have some support in this area. So I think that's it, guys. Basically all I wanted to cover for now. So sorry if I got into kind of like analysis paralysis and way off base, but there's always a lot to look at, and it's important to take a look at it. But the most importantly is to understand your environment, see where we're at. We're in a downtrend clearly, but we're also at points of support. So that doesn't mean that just because we're in a downtrend that we don't have long opportunities. We absolutely do. And even from here, like from this low to, what do we say, like 2,800? Look at that. That's 60%. That's a fucking huge move. That's huge. 60%, 65% just to 2,800, right? I mean, if we did it right here from where we're currently at to that, it's still 40%. That's huge, right? We've got the downtrend. So there's absolutely longs, but there's also shorts that we'll be looking at. So I'm going to end it here. You guys have a great weekend. I think tomorrow we're going to be doing a joint space with several other projects. So I think we're looking at 2 p.m. Eastern. That's going to be Saturday, 2 p.m. Eastern Standard Time. And yeah, it should be a fun space. I mean, I'll get in touch with everyone, see who's all coming. But what we're building is this fun little group of developers and teams, businesses, projects, where we can talk about the market, we can talk about crypto, we can talk about the projects, and kind of just just general whatever, and also involve the community, because that's what it's about. That's what DeFi is about. And yeah, I'm excited to see. Also, cryptolist.com, check it out. If you've stayed to the end, appreciate it. But check out cryptolist.com, as we are preparing to release the charting platform that we have. Obviously, a couple factors that we're wondering. Is it good to release it at the yearly low or multiple year low, and in a downtrend and everything? Obviously, we will be releasing it very soon, but timing is important, and also making sure that all the bugs are worked out, that testing's good. So we're finalizing that, but there's some very cool stuff that if I talked about, it would negate what we're doing. So I'm not going to ruin this, but there's some very cool opportunities. I'm very excited to explore what we have in front of us. So I guess as far as list goes, don't feel I would encourage you not to feel down. I would encourage you not to feel discouraged. The market's down. We might be going lower. Long term, we might be going lower, but crypto and DeFi are here to stay. Projects, businesses, teams, these tokens, yeah, a lot of them are going to fail. This is going to shake out some of the weaker teams, and it's going to challenge, right? But this is kind of a purification. We go through this. I don't. My personal belief is that, because we're so tied and coupled to the boom and bust cycles that fiat currency has given us, and poor centralized governance has given us. it might be lower as people. I mean, we might be affected in a bigger way, meaning crypto and DeFi might be affected in a bigger way because, right now we can still differentiate crypto from IRL because people are not really, you can't go and buy gas with Ethereum, right? But when that's the case, once you're able to be buying more regular items, and as this continues to grow and crypto becomes its own thing, we're going to have shorter down periods, and we're still going to have volatility. It's going to be really fun, right? But it's going to continue to trend upwards. This is largely deflationary. It's not inflationary like the fiats are, and it's not centrally managed, which is fantastic. So this will continue to grow, continue to expand. It'll find its place. It'll compete with the dollar, but if we can keep our distance, if DeFi can keep its distance from the fiat controllers, then their decades-long recessions and depressions and things like that are going to be swifter and self-correcting in DeFi, right? The reason why these depressions last so long and these recessions last so long is because it's the free market trying to combat the centralized manipulation, right? So a lot of wealth gets removed and stolen because of their policies. Things are suppressed, right? Printing money doesn't solve anything. If list is down, right, from the all-time high. List is down. Would it help the situation if we took all the tokens that we had locked up for centralized exchanges and for other dexes and for staking and all that? Would it help if we just took all those tokens and just gave everybody tokens? No, right? Because people are going to cash in. People are going to take these tokens and they're going to sell them, and it's going to drive the price even lower. And if we, let's say we have 1 trillion tokens in supply, if we just gave everyone like, hey, whatever you have, we're going to double it. Does it actually double your value? It doubles the value for the first person to sell, right? And then from that point, it's precipitously down, right? To the point where, yeah, you might have double the amount of tokens, but you have 90% less value, right? So, no, anyways, anyway, I'm on this tangent. I'm going to let you guys go. Much love. Have a great weekend. We'll have some announcements coming up soon. We'll be talking about the release of the platform, the change in the tax structure, BUSD rewards, the bounty system. So there's a lot that's going on. Appreciate the patience and also the investment, not just financially, but with your time, learning with what we're building, and stay along for the ride, because what we're weathering the storm. CryptoList is weathering the storm, 100%. And so we'll be able to continue to grow and build. And we're going to get through this this downtrend. There's no doubt about it. Especially with some of the things that if I talked about, it would negate. So I'm definitely not going to be doing that. But just keep, stay optimistic. If the market's got you down, go out and spend time with family. Look, we're here. This is fun. This is our livelihood. This is money. It's financial freedom if we're able to manage our emotions. But you can't take it with you, right? This isn't what life is about. It's fun. So for me, crypto isn't about the money. It's about building. I like to build, right? And what we're a part of is historic. What we're a part of is this building and construction. Not just me. I'm talking about everyone in DeFi. Everybody's playing a role in this, where we're building this historic transformation that allows individuals to own their own wealth, to own their money, to have control, to take some power back for the first time fucking ever from centralized bodies of government or institutions, right? Doesn't actually have to be government, despite it, anyway, not to get on that. But what crypto does, what crypto offers, is the ability for people to take some power back. And the amount of what's being taken back is your purchasing power, your power to vote with your dollar. This is, and when I say dollar, maybe I mean ether. Right? We got to get decoupled in a way from the dollar. That is going to lead to much stronger markets, more viability for DeFi. The longer we're tied to that sinking ship, the worse we're going to do. Right? It's a toxic relationship we have. We need to break up with the dollar. We need to get rid of them and say, nope, we're good. Sorry, you're dragging us down. We're on to bigger and better things. We're changing our friend group, our peer group, to other blockchains. You know what I mean? Like we do this in our own personal lives where there's toxic people, and we say, hey man, I'm just done, right? Or we tell our girlfriends or whatever, we're just done. Sorry. Look, we got to break up with the dollar, dragging us down. Can't handle the baggage, right? That's what needs to happen. And when that happens, that's going to be probably the best thing for us, though painful at first. And I know some people are just not going to like it. But anyway, beautiful talk, everybody. Thanks so much. I appreciate you. You have a great weekend. We will be chatting soon.